Densberger. Jeffers.
Here.
Call.
Here.
Mayor Mingus.
Here.
All present except Commissioner Densberger, Your Honor.
Thank you very much. We're here tonight for audit presentation. Of course, no official action will be conducted. Good to have you here. Jeff, I'll turn over to you.
Okay, we're here for the audit presentation as of 4/30/2018, and giving the presentation is Adam Foley with Clifton West Allen.
All right, good evening, everybody. Adam Foley, principal in charge of the audit for this past April 2018. Actually joined by Lindsay Samp there in the purple, who performed the manager detailed review duties of the audit during the year. So back in October, we had issued financial statements, a TIF report, a couple letters that we are required to issue as well. I'm going to just kind of briefly go through those with this presentation that I believe you have in front of you. So I will start on page 2 here, and really these first couple slides or pages are to just help navigate you through the financials if you were to look through them, where you could find certain information. So I'll just kind of summarize the highlights here on these first 2 pages. So page 1 is where the audit report would be. And we issued a clean or an unmodified opinion on the city's financial statements. This is the best opinion that we can give. Page 4 is where the government-wide financial statements would start. This includes all capital asset, long-term liability, depreciation activity that you're probably not accustomed to seeing month to month. But this is where it would show assets plus deferred outflows of $214 million, contrasted with liabilities plus deferred inflows of $196 million, resulting in net position of $18 million. I should specify the governmental activities of that $18 million is in a deficit position. The positive part would be in the business type activities. Now, the overall change in net position for the city during the year was a decrease of $2.2 million. Page 8 is where the fund financial statements would begin. So this is more on the level that I'm sure you'd be accustomed to seeing month to month on a modified accrual basis. Shows the major governmental funds is listed there, as well as the major enterprise funds. Skipping ahead to page 3 here, or slide 3. Page 24 is where the footnotes start, and there's a wealth of information in the footnotes. I'm not going to go in detail of those by any stretch of the imagination. But note 8 does highlight just a couple of the funds that have a balance that are in a deficit position, being the special tax allocation fund as well as capital projects funds. Page 70 is where you could find some required supplementary information regarding pension or other post-employment activity. There's also budget to actual schedules of the major funds, so general, riverboat, as well as the special tax fund, special tax allocation fund, excuse me. And then starting on page 82 is where you could find some supplementary information. So these would be combining schedules of the various funds, as well as the non-governmental or non-major governmental funds and fiduciary funds. So that's just to kind of help navigate through the financials if you were to look through them. The next couple of slides are a quick, very high-level snapshot or overview of sort of the city as a whole. So page 4 is revenue, and this would just be all the governmental funds. So this excludes the business type funds. That excludes water, sewer, east side, as well as the marina. So the revenue for 2018, now granted this, I realize we're 6 to 8 months after year end, but comparing 18 to 17, 18 are those blue bars that you see. 17 is going to be the purple bars, and it just shows the difference in various revenue categories. Total revenue went up from $44 million in 2017 to $45 million, and you could kind of see the shifts in the categories there. The bubble tries to, at a high level, explain those variances. So the increase in revenue from 17 to 18 was mainly due to an increase in taxes, offset by a decrease in the intergovernmental revenue. Now, the taxes is sort of a timing thing. Because of the timing of when the state gave the city certain income, state income tax revenue, the city ended up recognizing about 13 months worth of revenue in 2018 versus 11 months in 2017. So that caused an increase. Now that was offset by the intergovernmental revenue, which is because of the FEMA grants that was received in 2017. So then the next page, looking at the expense side, again, kind of splitting it out by function there, blue being 2018, purple 2017. Overall, the expenses went up from about $44.2 million to $46.4 million. The increase in expenditures was largely due to an increase in the police, fire, and other categories. So the police salaries increased due to the new police contract and back pay that was awarded. Fire had salary overtime increases, as well as a number of ambulance and fire calls during 18. And let's see here, as far as the other category is concerned, there was that $1.3 million worth of early retirement incentive that came into play during 2018. So the next page is going to be the residual fund balances of a few of the city's major funds, as well as the total other governmental funds. So the very left is going to be the general fund, showing an increase of $6.9 million to $8.3 during the year, riverboat, special tax, so on and so forth. The majority of the increase in the general fund was a result of an increase in that tax sales revenues we discussed on the previous slide. The majority of the decrease in the capital projects fund was a result of just an increase in debt service expenditures during the year. So then we've been talking about the governmental funds. The next slide, the next page 7, takes a look at the enterprise funds, and it splits it out by water, sewer, the marina, as well as East Side Center. The increase in the water sewer fund revenue from 2017 to 18 was mainly due to an increase in the charges, which of course is put in place to help fund future projects that are anticipated for the treatment plant there. Not a whole lot of change in the marina and the East Side Center. So that's a very quick overview of the financials. I'll touch briefly on the 2 letters that we have to issue. So page 8 talks about the internal control letter. This is where we would note any material weaknesses we came across, any significant deficiencies, or just other recommendations that we had. So during the year, actually all the items within the letter are repeats from the previous year. Some were anticipated, I would suggest. So for example, the material weaknesses, the financial statement preparation audit adjustments, because of the nature of us as an external audit firm, helping the city prepare the statements and propose adjustments, we have to put that as a material weakness because we can't be part of the city's internal control structure. The lack of segregation of duties is a bit, while it's a repeat, it's a bit modified from previous years. We had noted that, there could be some tightening of controls in the East Side Center. Well, that was tightened up during 2018, but during our audit this year, we noticed that, the cash receipt process over at the marina could be tightened up. So we identified that as an area to consider to, as best as possible, try to segregate duties, realizing it's not always possible to have that ideal segregation of duties. We did not note any significant deficiencies. So the other matter that we did, or the other recommendation that we came across, is that there wasn't a consistent place at the time for the entire year, that there would be or a consistent process in place to reconcile the East Side Center's credit card account. So we did note that there was an unreconciled amount of about $11,000. The only other thing I'd note with this letter is that in the previous year, there were 2 other recommendations that we did have, and those were not repeated. So there wasn't anything new necessarily that we came across outside the segregation of duties item that we noted over at the marina. So the last letter I will touch on is the letter to governance, which for the most part is largely boilerplate language. This would be our opportunity to express to you as the council if there were any disagreements with management or any significant issues or difficulties that we came across during the audit. We didn't really have anything, we didn't have anything to report there, I'm happy to say. Probably the main thing that I would point out within this letter to keep in mind for next year is for the city's April 2019 financial statements, there's a significant new accounting standard that will hit all governmental entities. And this is in relation to other post-employment benefits. So the health care benefits provided to retirees. For those of you that may remember or may have been around, it's probably about 3 years ago now when there was a new standard for the pensions, and it caused a very large liability to be put on the books. It was measured at a different way, and actuaries were brought in. It's essentially the same standard, but now for the health care benefits that were not being recognized the same way. So long story short, that liability as of 18 is being reported at $18 million. I would guess, based on what I've seen thus far implementing this standard, that number would go considerably up. I couldn't tell you how much because it's very much an actuarially driven number, but it's just worth pointing out that there will be another higher liability that will go on the city's books come April of 2019. So I realize I kind of went through that kind of quickly, and it's largely what I had to present. Did want to take the opportunity to thank Jeff for all his patience with us and work that he put in during the audit process. But that's what I had, and I'm happy to answer any questions.
Any questions from the council?
I have none. I had a couple of questions pertaining to a couple of these material weaknesses that you pointed out, but Jeff answered them. So I don't have any further questions.
Anybody else? Anybody in the audience have any questions?
Kind of a quick run through of that. What I could gather, basically, are you saying that revenues are down, expenditures are up, and we're going to get an $18 million debt?
The $18 million, well, the $18 million is what was reflected. It's already on the books as of April 2018 to reflect the long-term liability for what employees of the city are currently
Right.
earning for healthcare benefits. But yes, starting in 19, there's a new accounting standard that is impacting all municipalities, all community colleges, anybody that reports under governmental accounting standards, that by virtue of how it gets measured now, where it's trying to recognize rather than what the city is contributing year to year, so it's a little more short-term focus currently, it's going to be more long-term focus, where the actuaries are taking into account what all the employees of the city are going to be earning in the future. So it's very much a significant estimate. It's not a concrete.
So it's always been there every year, it's just being put onto the books this year.
Yes, that's,
Okay.
yes.
So, but we're kind of been ignoring it, that the city didn't have that liability then for all these years, and then in 19, we're going to say now all of a sudden you have this big unfunded liability.
Well, as you said, it's always been there. I don't know that I would use the terminology that it's been ignored. It's just under accounting standards, that change in standards is now actually going to be put on the books.
Okay, so revenues are down though, and expenditures are up?
Well, the revenues from 17 to 18 increased.
13 versus 11 months? To me, that looks like a decrease.
Well, that was one specific type of state tax revenue that caused it. There was a timing there. So it's not all of the city's revenues. So that did cause a little bit of the increase there, yes.
Okay. And then all the increase in expenditures is all from the early retirement?
Well, yes, there's 1.3 million that was early
So-
retirement that was paid out during or recognized in 2018.
So, all right, I just wanted to get a kind of a clearer picture there.
Thanks, Don.
All right, thanks.
Anybody else?
Just,
Go ahead, go right ahead.
you're
there's nobody
offering
else.
it to the audience, that's fine.
Keep going.
Well, Mr. Norbert's mentioned the early retirement expenditures. I know there is expenditure, but there's also payback to that. So it's also a cost avoidance for future, so it's not a necessarily a net loss situation. I guess that's my question or comment from Mr. Becker.
So yeah, there was some positions eliminated, and through the union positions, some of those were hired back at a lower rate, which would be what you're talking about in the savings.
That's part of it. I know that back several months ago, it's been some time ago, where we had a discussion about the overall payback of what it costs us $3 million to finance and do the early retirement. But then that is, it is not an ongoing expense without any payback to cover that $3 million. That money is covered or will be in the future. I think you were estimating at that time, maybe 5-6 years, there's some number, I don't know exactly what it was, but I guess my point is that it's not just a straight cost or expense, but there is a payback for it over time to be determined, but we know ballpark where we're at, it will be paid for and no longer will be a negative on the ledger. It's actually a positive in the future. So this is a snapshot in time right now to show where we're at. So, which for all these funds and where the rounding amounts come is where the counter cuts off financial, where, our fiscal year is separate from the calendar year and so forth, so that varies in how the state pays and how they've withheld money and how they finally pay, and we had no control over that, really.
Okay, anything else? Saying nothing else, is there a motion to adjourn this special meeting, please?
So moved.
Commissioner Call, second, please.
Second.
Mr. Jeffers, roll call, please.
Commissioner Decker?
Aye.
Jeffers?
Aye.
Call?
Aye.
Mayor Mingus?
Aye.
All present voting aye, Your Honor.
We'll reconvene in 15 minutes. We're adjourned.